Every single morning at 7 a.m., millions of people step out of their homes, unlock a brand new $40,000 automobile, and sit in bumper-to-bumper traffic for an hour, just to arrive at a job they secretly despise. And if you ask them why they work so hard, they'll tell you they need the money to pay for their life. But if you look at their bank statement, you'll discover a terrifying closed loop. They are working a job they hate to pay for the car that takes them to the job. Welcome to the car loan prison, the single most normalized, universally accepted financial trap in the modern world. Think about how brilliant this system truly is from a corporate perspective. 50 years ago, a car was simply a tool, a piece of utility designed to get you from point A to point B. Today, the automotive industry, backed by major financial institutions, has successfully transformed the motor vehicle into a psychological badge of status and a lifelong debt sentence. They convinced an entire generation that as soon as you get your first real paycheck, the very first thing you must do is sign away 5, 6, or even 7 years of your future labor for a metal box that loses 20% of its value the second you drive it off the lot. You aren't driving a symbol of freedom. You are driving a set of golden handcuffs, a monthly payment that guarantees you can never afford to quit your job, never take a risk, and never build actual liquid wealth. Before we break down the brutal math behind this trap and how dealerships use psychological tactics to lock you into high-interest debt, I want to ask you a direct question. What is the current monthly payment on your car, or the worst car loan deal you've ever seen someone take? Drop the numbers in the comments below. Be honest. When you look through the comments section, you're going to realize just how many people are quietly spending a massive chunk of their monthly income just to keep 4 wheels turning. In this video, we are exposing the full mechanics of the car loan industry, why the system wants young people buried in vehicle debt early, and how to break free from driving to nowhere. To understand how normal, sensible people end up spending $600 or $700 a month on a depreciating asset, you have to look at the psychological mechanics used inside the finance office of a dealership. When you walk onto a car lot, you think you are negotiating over the total price of a vehicle. The dealership knows you aren't. Their entire strategy relies on a single psychological trick: monthly payment framing. They don't want you thinking about the $60,000 you are about to owe over time. Instead, the finance manager looks you in the eye and asks one simple question: what monthly payment are you comfortable with? The moment you give them a number, say $500 a month, they go to work behind closed doors. If the car you want costs too much for a standard 4-year loan at $500 a month, they don't lower the price of the car. They simply stretch out the loan term. They move you from a 48-month loan to a 72-month loan, or even an 84-month loan. On paper, your brain hears $500 a month and feels relieved. It registers as manageable. But in reality, you just agreed to pay thousands of dollars extra in compounding interest to a bank, extending your debt sentence well past the point where the car's factory warranty expires. You end up paying interest on a vehicle that is breaking down, out of warranty, and worth a fraction of what you still owe on it. This is how millions of drivers fall into negative equity, or being underwater on a car loan. When you owe $40,000 on a car that is only worth $25,000, you are effectively trapped. You can't sell the car without coming up with $15,000 in cash just to clear the title. So what does the system encourage you to do? They roll that negative equity directly into your next car loan, stacking old debt on top of new debt until your monthly payment resembles a second mortgage. Look at how normalized this trap has become in everyday culture. How many people do you know who trade in a perfectly fine car every 3 years just to get the newest body style, perpetually keeping themselves in an endless cycle of car payments? Let's talk about it in the comments below. When most people sign a car lease or loan, they do a dangerously simple calculation in their head. They look at the monthly payment, compare it to their salary, and if there's enough left over for rent and groceries, they sign. What they completely ignore is the secondary financial siphon that attached itself to their bank account the moment they drove off the lot. A car loan isn't just a single payment. It is the gateway fee to a cascade of mandatory expenses designed to keep your cash flow at zero. Because it's a brand new or high-value vehicle owned by the bank, you are legally forced to carry full coverage insurance, which has skyrocketed in cost over recent years. Add in routine maintenance, synthetic oil changes, registration fees, property taxes, premium fuel, and the inevitable out-of-warranty repairs. When you tally up the real cost, that manageable $600 monthly payment is actually costing you closer to $1,000 every single month. Now, let's talk about the concept the corporate matrix hopes you never learn: opportunity cost. If you took that same $1,000 a month and invested it into a standard index fund or cash-flowing assets over a 10-year period, compounding interest would turn that money into well over $150,000 of liquid wealth. Instead, at the end of those 10 years, what do you have to show for that $150,000 of expended energy? A 10-year-old vehicle with rusted fenders, a slipping transmission, and a trade-in value of barely $3,000. You literally sacrificed $250,000 of your long-term freedom just to flex a shiny metal box to strangers on the highway. Look at your own monthly expenses honestly right now. When you add up your loan payment, insurance, gas, and maintenance, what is the true monthly cost of your vehicle? Are you spending more on four wheels than you are on your future? Drop your total number in the comments below. So how do you actually escape the car loan prison? How do you break a cycle that society insists is perfectly normal? It starts with the complete and total destruction of your vehicular ego. You have to internalize a brutal truth. The people you are trying to impress in traffic do not care about you. When someone sees a $100,000 car on the highway, they don't look at the driver and think, "Wow, that guy is amazing." They look at the car and think, "Wow, I wish I was driving that." You are paying a massive premium to be the invisible chauffeur of a status symbol. To break the matrix, you have to redefine what a flex is. The system wants you to think a brand new German luxury sedan with a $900 monthly payment is a flex. It is not. The ultimate financial flex is driving a 10-year-old, reliable, paid-off Honda or Toyota. When you see someone driving a clean, older car, you aren't looking at someone who is broke. You are likely looking at someone with a high financial IQ. You are looking at someone who is aggressively funding their investment accounts, stacking cash-flowing assets, and buying back their freedom month by month. They are choosing future sovereignty over present-day validation. If you are currently trapped in a terrible car loan, you have two choices. Option 1, stop the bleeding, sell the car, take the hit on the negative equity if you have to, clear the debt, and buy a cheap beta in cash. It will hurt your pride for a few months, but it will save your financial future for decades. Option 2, if you are absolutely stuck, you must declare war on that loan. Stop spending money on going out, stop buying designer clothes, and throw every single extra dollar at the principal balance of that car until the chains are broken and you possess the physical title. And once it is paid off, you drive it into the ground until the wheels literally fall off. A car is a tool to transport you from point A to point B. It is not your identity. It is not your net worth. Do not let a depreciating piece of metal dictate the terms of your life, and do not let a bank profit off your insecurities. Take the keys back. Before you click off, I want you to leave one final commitment in the comments. If you are currently financing a car, what is your exact plan and timeline to pay it off completely? If you drive a paid-off car, what make and model is it, and how much money is it saving you every month? Write it down and read the responses of the people breaking out of this exact same trap alongside you. If this video opened your eyes, subscribe to Mind Trap. Share this with someone who is about to make a terrible financial mistake at a dealership. And remember, don't let the system build a cage out of your own ego.